Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 7th of January, 2023 now. So, Happy New Year to everyone. Welcome back to my channel after a couple of weeks break for the holiday period. I hope everyone had a good holiday period and wishing everyone a healthy, happy, and a productive year ahead. And before I start the weekly analysis, I thought I'll do a quick review of last year, 2022, and across all the major economies. You'll find that basically the narrative is all about the central bank fighting off inflation. So everyone's hiking interest rates, and the Fed starting off with the DXY here. FOMC have raised rates 7 times last year, and now it's at 4.5%. The next meeting is on February 1st, and hoping that they will slow down the rate of increase to perhaps 0.25%. The last increase was 0.5 after 4 consecutive increases of 0.75% or 75 basis points. So hoping that they will slow down. And so for this is a weekly chart of the DXY. And from the start of the year, started off near the 95 level and ran up all the way to almost hit the 115, so almost a $20 move here. So that's about 2,000 pips. Before this last couple of months or the last quarter of the year, where it slowly pulled back for retracement. And that's because the expectation that the Fed will not be too hawkish and slow down the rate of increase. So that's why the tail off at the end of the year. And we can actually just flip this for the year and see where it's pulled back to now. Is fallen below the 50 pip retracement, and finding support around at the 103 now. So we'll see if it's going to dip further down to test the 62 pip retracement, or in fact down to the next round figure at 101. There was a support before, and where it bounced off for a second rally up. So we'll see if that's going to taper off further down to 101. That's another critical support area. Worst case, it may go all the way to test the key round figure at 100. But we'll see what happens in the upcoming weeks, especially as we move closer towards the February 1st meeting. But yeah, that's the picture on the US side. Now let's check out the spot gold. And last year, you see that it did attempt in the early first quarter, it did attempt to test the all-time high close to 2075, but then after failing to hit it, it made a significant shooting star here and it fell all the way back down for another couple of quarters until the final quarter, where it managed to recover with this triple bottom here, recover and climb back up above 1850 now. So initially, because of inflation fears, then as a hedge, that's where there was buying strong demand for gold, and this push up the price here. But then with the Fed stepping in to drastically increase rates, then it started to taper down, back down as the US dollar gained in strength, and this caused the fall for spot gold and also the other major pairs. But it did stay, climb back up above 1650. It didn't quite reach 1600. It was close, but managed to recover and climb back up. And if we can flip this recent drop, and it has recovered over 50% from for the range of last year, and it could try to reach the next round figure at 1900. That's at the 62 fib retracement. So especially after yesterday's bullish move and a bullish close for the week. Now for the rest of the year, not sure whether it's going to test the 78.6 fib retracement 1973 area. Not sure whether it's going to get there, but probably likely going to consolidate with support above 1800. So between 1800 and 1950 would likely be the range for the year. And all depends on the US dollar and what the Fed does as well for the rest of the year. We can also take a fib for a longer term with, let's see, this same move up. And yes, it did dip to fall to the 50 fib retracement, and that's where it found support for the triple bottom and climb back up. Right there at the 1617.50 area. All right. Let's take a look at dollar yen. And dollar yen had the most massive move here. Let's just check the range for spot gold for last year. From its high down to its low, that's about 4,500 pips. While the dollar against Japanese yen had a massive year from the lows to the highs. Sorry, that's the fib. Draw that later. From that's 3,800 pips. Yeah, getting close to 4,000 pips as well. And with the strong dollar, that's where the massive breakout and push up higher all the way to 151.90 area. There's a massive move here and not seen since 2001. Let's see, let's check this again. No, that's the all-time high, I think, for quite a while, multi-decades here. So if we flip the range for last year, And in the last quarter, it fell back below 50% pip retracement, down to 130 round figure. And then trying to recover back above the 50 pip. But it was dampened down from yesterday. Otherwise, it did attempt to try to climb back up towards 135. Okay, the Bank of Japan did not change interest rate at all throughout the year. That's the only major central bank that didn't increase rates. Even the Swiss National Bank did increase from a negative rate, and as well as the ECB. However, in the last meeting late in December, they did announce some change in the bond yield curve, so there is some flexibility for the bonds yields, and that's a possible view of tightening. However, at the same time, they also started buying bonds, so also trying to support the economy as well. So they're doing both QT and QE. Okay, so the drop from the high was quite significant as well, almost 2,200 pips to close back down for the year to retrace the massive move. And we can use this fib as the reference now. Okay, so let's move on to the weekly analysis for this week for these two pairs. So here's spot gold, and from yesterday you can see there was a massive rebound back up after Thursday's drop, and it managed to recover. And this trend line is all the way back from this previous trend line here, which provided support and then resistance, and now it has been broken and providing support again. So this was the old resistance. So what happened on the Thursday and Friday, it was basically the jobs report. On the Thursday, the ADP, which is the private sector, reported a way better jobs added than expected, and that boosted the US dollar, brought the spot gold down, found support here, and then on the Friday, it recovered with, even though the non-farm payroll data shows a slight slightly better picture for jobs, but it wasn't as hot as expected, and this tempered some expectations that the Fed could increase the rates or stay at a high level, and hoping that they may reduce it down to only 0.25% rather than 0.5%. So with that expectation, that was boosted, plus an hour and a half later, the ISM services PMIs was a shocking data with which fell below 50, and that brought the US dollar lower and pushed up all the other major pairs. If we take a look on the 4-hour time frame, this, well, we start at the 1 hour. And this was the initial move up for the non-farm payroll. And then after a pause until the 11 o'clock news, and that was the gap up here with the shocking US ISM data, and this continued to rally to close high for the week. And on the forward time frame, you'll see that gap there at the close of 11 p.m. It was 11 a.m. Eastern. So this fib, we can actually update this fib to show the next target, which is getting close. Or we can also move it back up to this reversal move, or to this swing high where it's approaching. There's a swing high that is approaching now. And previously there was resistance around the 786 retracement, and that was broken, and now it's approaching to retest and retrace all that fall from June last year. So key resistance at 1900, but approaching the swing high area. And we've got support now at 786. Interim support. And a critical support at likely this area here. Let's check this trend line from previously. Okay, there was a swing low here, and now it's providing support along with a rising 55 and 200 coming up. So it's definitely on a bullish bias. And let's see if it's going to break the 1870 recent swing high to target the 1900 zone. Let's take a look on the weekly time frame. And that's the bullish breakout here, bullish candle here. And trying to target this swing high area. And this week there's the US CPI data on Thursday, so we'll see how that's going to impact the US dollar price action. Okay, so let's also take a look at the DXY in more detail. All right, so here's the DXY daily chart, and it has been consolidating between the 138 and the 162 fib extension of this reversal move. And tested the 105 just above the 138 here to the daily 200 EMA before falling back down lower. And support from the 103 where the 162 fib extension is. So it's trapped between the 103 and the 105 for now. This is the still intermediate resistance, and above that, that's the key resistance at the swing low. It has fallen lower. And we also take a look at the 4 time frame and perhaps the 1 hour. See what happened on the Friday. But before that, on the Thursday, with the ADP private sector jobs report, that was the boost that it got with a better than expected numbers, and continue to climb into the daily pivot on the Friday before the NFP data came out, which was not as good as expected, and after a pause, then that was the major drop with the shocking figure from the ISM services, which came out below 50. So that drove the US dollar back down. So that's the that was the dynamic, the price action of last night. And this Thursday is the US CPI data. We'll see if that will help the US dollar to recover or further add the bearish momentum. Let's go back to the daily time frame. And for now, this fib is still valid. Look at the weekly, and there's a doji there for the week. All right, so this critical support now at the 103. If that support is broken, then the next key one is going to be at the round figure of 101, just above the 100. So the 101, there's a cluster here of support. And let's take a look at, yeah, there's this previous resistance, which is now support. And at the 101, there's also another support area. Let's go to the monthly, and you will see there was a double top. That's where the trend line comes from. Double top from the start of 2017 and tested in February 2020. So it has it's been oscillating around that trend line. So we'll see whether it's able to stay above the 103. Seems like that's a key level here. And it definitely needs to climb back up above 105. If it's going to recover. But for now, looks like it's just consolidating. And that may persist until the CPI data comes out, and then following a couple of weeks until the FOMC meeting on 1st February. All right. Let's move back to the other major pairs. Let's move on to the dollar against Japanese yen. And you'll see where it was blocked by the 200 EMA on the Friday, yesterday, and fell back down. Although for the week, it's still probably a doji. Let's take a look at the weekly time frame. and yeah, spinning top, but with a longer upper wick. So that was because of the US non-farm payroll data and the poor ISM services figure. So this is now resistance. Along with this zone here at 130 as a critical support zone now. Let's go back. That's right at the swing low here. We can actually update this fib to mark all the way up there, and yeah, look at this retracement. It has fully retraced the move up from August last year. And let's clear these. This area will be key resistance as well. All right, so now it's consolidating between the swing low at the 130 to the 135 area where the 200 EMA is. And let's see whether it's going to weaken further. And if it does, then there's another key support zone. If it does break out higher, it needs to break through this cluster and the 55 EMA and get back up to the 62 fib retracement area. Let's take a look at this longer term trend line from from a previous swing high where it broke out from. And that's at 125.85. So yes, it's just above 125 and just below the 126 round figure. So this 130 area needs to hold, otherwise it's going to target the 126. All right. So do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.